Today I'm making a video that I've been putting off making for 2 months or so. The reason I've been putting it off is because it's not fun talking about your past mistakes, and that is exactly what this video is going to be about. In this video I'm going to talk about my first year as an investor, all the things I learned, and most importantly, how you can avoid doing the same mistakes that I made. This video is a video that I wish I had when I started investing, because then I would most certainly be a lot wealthier than I am. My journey started when I was around 8 years old, and I started getting interested in money. I wanted to start making my own money because I found out that my parents had an account where all my presents and Christmas presents had been put in for my whole life. So there was around $1,000 in that account, and that just got me completely hooked on the whole thing with saving up money, making money, becoming rich, wealthy, never have to think about money. So the last year I took it a step further and started investing some of the money that I had saved up, and the amount that I put into the market was around 15 grand, and that was not right away, that was like over some periods. I started investing when I was 13, about to turn 14, and now I'm like 10 days away from turning 15, and I've now invested 15 grand approximately in the stock market. And let me just tell you, if I look at my account right now, there's not 15 grand in there, and here are the mistakes that I made so you can avoid making them hopefully as well. So after 1 year of being in the stock market, I've been through ups and downs. It started out actually pretty well, and that was probably also the worst thing that happened to me. My first month of investing has been by far the best month I've ever had. That month I was up 20% or so, of course on a smaller amount of money, but still 20% in a month. I was high on my own achievements, and I thought that I could do everything and it would be easy to get a portfolio to 50k and whatever. And I was wrong, and that tiny ego boost, or actually pretty big ego boost, was probably also what led to kind of my downfall again in the stock market. Right now I'm down about 25% year over year on my investment. It has been going down pretty rapidly here the past month. I'm going to give you about 5 things that I would have done differently. Diversify. I would say have 20 stocks in your portfolio. I'm an example of this. I have 5 stocks in my portfolio. 5 stocks is the only thing I had. That really cuts deep when one of those stocks goes down like 20%. That cuts deep into your portfolio and can really feel that. So diversify into different stocks. One thing that I've never really been such a big fan of is ETFs, index funds, but now I really see the point of them, and I see how easy it is. It's so easy. You just put in your money and you pay like 0.5%. Most likely you will make a 10% return or something yearly. And that just sounds great, but that said, you don't learn nearly as much from doing that. And that is why if I were to start over again, what I would have done was invest like 80% of my portfolio in index funds, and then take the rest. It doesn't matter if it's a small amount really, and then start investing in individual stocks that I pick out, because that is really where you learn so much. Learning to stock pick and being good at it is it's worth more than an education. It's insane. The amount of money you can make with that skill is crazy. So that is definitely what I would recommend, because if you have 80% in index funds, things can go very bad and you still wouldn't have lost that much money. So just remember, if you have individual stocks, especially if you only have 5, things can go south just as quickly as they can go north. Also, something that I learned is always have cash in your portfolio. Always have around 20% cash that you can invest in whatever stocks you'd like, and then maybe use it as some short-term leverage. Those 20%, they might not make money while they're just sitting in your bank account, but trust me, they can make so much more money in the short term, because sometimes, I won't deny this, sometimes you just see incredible deals in a market, in a stock market, right? You'll see incredible deals that is just like once in a decade deals, and those deals if you aren't ready to take advantage of them, it's basically next decade until there's another chance. So if you don't have cash on you, yeah, that is really a mistake, and a mistake that I made as well, especially because I haven't got like a source of income that I get every month. I have a job, but that job pays me like once a year because it's not really a lot of money I make from it, and then I have different side hustles and stuff like that, but I don't have a set amount of income that I get every month, which means that I never really know when I have a lot of cash on hand. Right now I just got my salary and I have tons of cash. Like I have like at least 20% of my portfolio in cash. But always keep in mind that these great deals, they actually exist, and don't make my mistake and like only have 5% in cash. That is just too bad. The third mistake I made was just not playing the long game. Not because I really did too much the past year. I just kind of bought some more stocks and sat on my stocks, and really I really haven't sold. I only sold one stock for the past year. If you're in the stock market, then be in it for the long term and play the long game. That is really where money can be made, and that is where guaranteed money can be made. Because it's always nice to look at other people making like 100%, 10x's on their money, but when you have tried going through like a 30% decline in your portfolio, then you just kind of laugh at those people because you know that is just not sustainable for them. So definitely play the long game, and that also means don't look at your portfolio daily. Don't even look at your portfolio weekly. When I got into the rhythm, I look like once a month on the portfolio, and of course I look at some certain stocks that I own because I'm interested in buying more or selling or something like that. But don't look at your portfolio. It's just going to make your mind start thinking, should I sell? Should I buy here? What should I do? And those things can just tear you down mentally. And also something I want to say is, if you can't stand like the stress of investing, because there is a lot of stress, if you have your whole amount of wealth pretty much just sitting in a portfolio and you don't know what that portfolio is going to do tomorrow, that is very stressful. And if you can't handle that stress, if you can't sleep at night, if you always think about it and you can't really be with your family and be 100% invested, no pun intended, in that, then quit. It's not worth losing your hair and not getting your nights of sleep because of investing. It's just not worth it. So try ETFs. That is a lot more, a safe play most of the times. Or just not invest. Just focus on something else. That is definitely something that I learned. I've kind of learned to live with the stress now because, I've pretty much had a red day since like 12 months ago. So I've learned to live with it, and that is probably also a great lesson because, I've had a couple times where my portfolio has like went into green again, and every time that happens, I get so happy, right? It's like easy money, right? But I've learned to think about it in probably a very good way, and that is when your portfolio goes down, you don't really think too much of it. It's just like, well, it's going to go up again, and there's more buying opportunities now, stuff like that. And then when it goes up, then you become extremely happy and excited and want to research all these stocks and work harder to make more income and invest more. That is probably a healthy mindset, because honestly, that's going to make you a millionaire and much beyond that. The thing that goes together with that is just like, not looking at your portfolio, playing the long game. It is patience. Patience is the only thing that works, in my opinion, when you're in the stock market or the crypto market or whatever. It's just having patience and buying and not selling until you're happy with your gains and ready to leave your position. And also, as Charlie Munger says, the big money is not in the buying or selling, but in the waiting. And I think, he couldn't be more right on that one. I gotta give it to Charlie Munger. He's really a great inspiration for me, because he has like 6-7 stocks in his portfolio, and he can sit 10 years without doing anything, just waiting. That's really a great thing to understand about investing. It's like, when you're not investing and you just like your portfolio is just like a savings account, you treat it as one, and if there's not really any buying opportunities that you see, than just focus all that mental energy on working, making more income for yourself. Because then when there's good deals, then you can buy, and then ultimately that will lead to a great success. So the takeaway from kind of the whole patience thing is probably just like, you haven't lost any money or gained any money before you've sold. That is, actually that is very true, because a lot of people, they have like an unrealized gain of a lot of percent, and then it goes down, and if they can't value stocks, if they can't see if it's time to get out of the position, then they have no idea what they're doing, and their unrealized gains really doesn't matter. And the same thing if it goes down, right, and your unrealized losses, you haven't lost anything until you're sold. And if your positions go down and you do own great companies that you have really looked into, then maybe that will actually be a great opportunity for you to buy more. Probably the one most important thing I would give as a piece of advice for any investor out there is just good deals doesn't come around very often. You'll maybe find 1 or 2 great deals in a year. I've heard a lot of professional investors say that, and that's because it's just true. It's not often that you get a good deal in the stock market, like a very, very good deal. And to be honest with you, like most of your portfolio should be of these very, very good high quality stocks that you've found. And that is also why I don't really see the point in buying a ETF, because like pretty much 95% of the stocks in that index are not stocks that I would ever buy. I would never buy those 95% of the stocks, because if I analyze the stocks, I would see that is too overvalued. They're underperforming, and that is a bad business model. So in a perfect world, your portfolio consists of 100% stocks that you have picked out, and you're so happy with these stocks, you really believe in the companies, you're a great supporter of them. And if that is the case, and you see these stocks go down, of course, there's only one rational thing to do, and that is to buy more. And I definitely made this mistake with just buying stocks because I thought like everything's going up, buying in a certain sector that I thought would go up, and then not thinking about like, it's still a company, they can still do bad in a good sector, right? So I made that mistake of not, just buying things, because I had all this money that I'd made in like 5 years of my childhood, and I didn't know what to do with it. I just heard about investing, and suddenly I put all my money into stocks and crypto, and look where it turned out, right? If you can't find stocks that you really, really just never would stop buying, no matter how far they would go down, you just keep on buying them. If you have those stocks in your portfolio, then you're a lucky person, because you're set up for something great, because that means that every time those stocks go down, you'll be willing to buy more. It would just be natural for you to do that, because you see a stock that you like go down, it's a natural thing to buy more. One of my adult friends, who is a macroeconomics guy, he invests in a bit different way than I do. But one thing that he definitely did right from the start was, which also has made him great profits in a very short amount of time. He likes companies that are too big to fail, right? So he picks out a company that he likes, not really looking into it that much, which that's the only thing, like, concern I have. He sets a mark for himself in his head. If it goes over like $100, this stock, I'm gonna sell it. And if it goes down, he just keeps accumulating, and then when it goes above that point, he always have strategies in his head, and he will always follow the strategies that he has put for himself. That is the most important thing. When you like set a limit for yourself, like, I'm gonna sell at this price, and often the times if the stock just keeps on rising, then you'll think like, oh, I'm making so much money right now, I'm just gonna wait a day or two more. But you have to have these strict times in your head, strict plans where you're saying, I'm going out here. And the thing is, if you keep on buying in, that eliminates pretty much all the risk of investing. If you do these things with always having cash on your hand, which means that you can actually buy more shares when you want to, what is the risk of investing? It goes down, you buy more, your average price goes down and down and down. And my last regret is just not buying a course, or not like learning from someone who knows what they're doing. That is my last regret. You think you can see it all on YouTube, but honestly, there's a lot of great things on YouTube, but there's not really a place where everything is just condensed down to everything you need to know, all the mistakes. So hopefully this video has helped you out with that. I really hope that you will not like suffer the way that I did in the stock market. I really hope that you will have a great stock market year in 2022, and I hope that you will support me by subscribing and liking the video, and I hope that you have a great rest of your day. Bye bye.